Alright guys, so the fallout from the US-China pause continues. We are now in a tariff truce that is giving the US economy more breathing room. Now China is really ambivalent about it because their trade was already well diversified. They weren't really affected. They were actually earning more money than ever before. And let's recap what just happened yesterday. The tariff war between the US and China de-escalated. We went from a crazy 145% down to 30%. So the US embargo on Chinese goods has effectively been lifted. This is good for the US economy and Besson deserves a small pat on the back for this. But it puts the US economy in a very interesting position. There's now a lesser chance of a supply collapse, which is a good thing. Chinese goods will begin rolling into US ports. However, the threat of higher inflation is still there. And let's not forget the bulk of tariffs will be borne by US importers and they will pass it down to the consumer. So global expectations for inflation they are rising. The US will have to address this. Either the consumer eventually buckles and the economy collapses, or US deficits will have to rise even higher. Because of this, we now have a big risk on trade in the US markets, and that means investors now believe things are better and they are piling into risk assets, which obviously means the US stock market. Now, as we covered earlier, a ton of money is flowing to Chinese stocks, but the US stock market is also rallying, and this is very important. The S&P flew up by over 2% in hours after the announcement, and whether this will last remains to be seen. It's all dependent on the US consumer, but it poses a big problem for global assets. Now, thanks to the trade war, US and Chinese markets they were under pressure. A ton of money flew away into other assets like EU and Asian bonds, and that was why currencies like the Taiwan dollar flew higher in just a matter of days. But now everything is starting to unwind in real time. This is a big shock, and we are witnessing a global bond meltdown which has big consequences. Yields on the 10-year across major economies have flown up to the moon. German yields are up by nearly 3%, Japan is up by 2.6%, while the UK has increased by the same amount as well, a big jump in a short period of time. And just like the US, these economies are heavily dependent on debt and deficit spending to survive. And as their borrowing costs continue to rise, this poses a big problem for the world economy. Now let's sit back and realize that the world is bigger than the US or China economies. Now both these countries need to export their stuff to the rest of the world, and now everyone else is facing a credit crunch. This is a direct consequence of the dollar system and why many countries will be forced into a horrific decision. Now take Japan's bond spike for example. Now that money is leaving JGBs, their 30-year bond yield has flown to the highest level in 25 years. The fear of tariffs and higher inflation is clobbering their demand down. So now Japanese companies have a higher cost of borrowing during a time when they are facing a higher tariff wall from Trump. When a Japanese auto company makes a car, part of the cost goes beyond just the raw materials, beyond just the steel and aluminum. The cost of capital or debt also factors into the final selling price of the product. Now, analysts are expecting the 30-year yield to fly up even higher and go beyond 3%. This is a horror show for Japan that is essentially trapped thanks to the debt levels as well. Countries today are now facing double crisis. They have a higher cost of capital that either increases the price tag or reduces their profits. Secondly, they are facing a tariff wall of at least 10% when exporting to the US. So earnings are under additional pressure as well. And this makes the relief valve or the solution clearer. You need to make your exports more competitive, and that points to a global devaluation coming. Now, Japan, for example, might be left with only one solution. They might have to restart yield curve control. The Bank of Japan might be forced to print money and buy their own debt to drive yields down. And this will help to bring borrowing costs down and thus provide some relief. In addition, it will weaken the yen as well, and that helps to increase exports to the US and the rest of the world, which is a good thing for companies that sell overseas. However, there's a really dark side to this strategy. You can't possibly print money and expect no consequences. The burden will be left to the savers and people holding the local currency, the Japanese yen. So people's purchasing power will get inflated away. So an item that costs 100 yen today might cost 120 by the end of the crisis. And this puts many economies in the world in a deadly trap, especially when it comes to trade negotiations with Trump. This will only encourage him to lowball them, the art of the deal style. It's important to remember that Trump is now on a high. He believes he won a trade war, so he's walking on cloud nine.
In addition, yesterday we achieved a total reset with China after productive talks in Geneva. Both sides now agreed to reduce the tariffs imposed after April 2nd to 10% for 90 days as negotiators continue on the larger structural issues. And I want to tell you that a couple of things. First of all, that doesn't include the tariffs that are already on, that are our tariffs, and it doesn't include tariffs on cars, steel, aluminum.
It's hilarious because he didn't even get his own tariff rate right. US tariffs came down to 30% and not 10%. I mean, it's hilarious that I even need to correct the President of the United States on his own trade policy. But if you're a US ally, you will be horrified. America's biggest rival, China, has gotten big concessions from Trump. They are facing a 30% tariff war, but they still have exemptions on electronic exports like smartphones. And let's look at the chart again. Many US allies are facing tariffs almost comparable to China. Japan is at 24%, Taiwan is at 32%, while South Korea is at 25%. Switzerland is at 31%, and the EU is at 20%. Now, I don't know about you, but boy, will I be pissed off. I would be demanding a total reduction of tariff levels. Just think about it. If Trump gave China such a big reprieve, we want one too. If the baseline tariff is 10%, Western economies still can't beat China because Beijing's cost of production is just so low. And that's why we keep saying here that China is the big winner and they played their hands perfectly by playing hardball. They didn't cave to the US and they got a fantastic deal, at least for now. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SEANFOO. Start your gold stacking journey today. So what will countries have to give the US to get further exemptions? How are they going to get Trump to lower the tariffs? Will they have to lower all tariffs on US imports now? Or will they have to allow their currencies to appreciate against the dollar even further? Because that would crush their exports as well. Now, safe haven currencies like the yen and the franc have plunged in value. At the same time, the dollar index have increased by around 1% in a matter of hours. So US exports are more expensive relative to other countries, which means the threat of a new Plaza Accord is back on the table. Remember that Trump has talked endlessly about non-trade barriers and how they have to come down. And now that Trump basically caved to China, he might extract bigger concessions from the rest of the world to make up for the loss. And I kid you not, this next arc for US allies is going to be wow. Trump is now scolding Europe, saying that they are nastier than China on trade. And here's what he said: "We have all the cards. They treated us very unfairly. They sell us 13 million cars, we sell them none." So it's very easy to project how this will play out. We can expect Trump to impose export quotas for the EU to buy US cars. Looks to be the same deal as the Brits. You need to buy US farm produce, you need to buy our vehicles, and here's the big one: you have to buy our energy exports like LNG as well, in addition to our cars. And from the looks of it, they will be in for the toughest negotiations ever. much tougher than China, which ended in less than 48 hours. And let's recall the trade deficits between the US and their trading partners. The biggest is China at nearly $300 billion in 2024. But as we said before, China's exports to the US are not easily replaceable. They are critical imports. They need to come in. And if that's the case, where will the US make up the shortfall? US allies like the EU, Japan, and South Korea, they all run big trade deficits with the US economy. They export more than they import in. So reducing the tariffs will be obvious, but the US will probably go beyond that. Getting countries to bring in a fixed amount of US goods will probably be par for the course. Strengthening their currencies will also be on the table. All that to hopefully reach a 10% baseline with the US. Now, during the US UK deal, Lutnick gave a press conference, and during the speech, he basically gave away the game plan of what these negotiations will entail. The US will be forcing countries, especially their allies, to directly buy US products to bail out their industries in a crisis.
So if you go step by step, aero and commercial planes, they sell Rolls-Royce engines to Boeing. We've agreed to let Rolls-Royce engines and those kind of plane parts to come over tariff-free. And what you're going to hear today is there's going to be an announcement at the UK that they are buying $10 billion worth of Boeing planes later today, but I'm going to let the name of the airline announce it because that's theirs to do it. Part of this deal was always to do it together and to do it strong, and you can see the numbers on this board. Everything about this board works exceptionally well for the United States of America. It lays out the plan that you can work with us in autos, you can work with us with aero and commercial, you can work with us in pharmaceuticals if you have a supply chain that is secure and protected in national security.
So the US will tap onto supply chains of their allies to stay afloat. They want cheap inputs from other countries while selling more stuff that China doesn't want to buy elsewhere. Sounds to me like Boeing is about to get even more orders from the G7 countries. Like it or not, this is now the art of the deal. This is why Japan is ruling out a trade deal without the US removing the auto tariffs, because it's now too risky to build a plant in the US. Imagine building a $5 billion facility to produce Toyotas, Nissans, and Hondas. You rely on US tariffs to ensure the US market is yours. But if Trump can suddenly reduce tariffs on China just like that, how about other countries? Building a new factory in the US is more risky. Even within the next 4 years, Trump can always U-turn again, and you're billions of dollars in the hole. The US-UK deal is a great example of this dilemma. As a result of the talks, the US has given the UK a generous export quota for their cars. Up to 100,000 British cars annually can be sold into the US consumer market at a lower tariff. Instead of the usual 25% tariff, the tax will only be 10%. For exporters, this is great news, but as a company looking to reshore to the US, this is not fair. It's downright risky to consider such a move. So in a bizarre way, Trump's trade deals are already backfiring. The China deal showed that the US economy is more fragile than we all thought. The UK deal showed that getting an exemption is more important than actually trying to reshore to the US. But let me know what you think. Will global bonds continue to implode, and which country will even consider reshoring production to the US now? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.